keep you updated on the capital and financial markets. Here is a recap of what happened. In response to the erosion of confidence in the Thai capital market, the Stock Exchange of Thailand and the Thailand Securities and Exchange Commission have agreed to upgrade listing regulations and strengthen supervision to enhance the quality of listed companies. The SET Board of Governors approved guidelines for improving the criteria for listed companies on the main bourse and the market for alternative investment to facilitate companies with strong financial positions and performance tapping into the capital market. Moreover, the SET plans to strengthen its oversight of listed companies by revising the regulations for assigning the C sign, delisting and backdoor listing to improve the quality of listed companies and protect investors. The new rules will be subject to public hearings in the third quarter, said the bourse. As more companies seek to use artificial intelligence in their operations, a consortium led by the Monetary Authority of Singapore released an open-source toolkit on the 26th of June to enable its responsible use in the financial industry. The Veritas Toolkit version 2.0 builds on an earlier version of this software released in February 2022. The original version had focused on the assessment methodology of fairness, but this updated version improves on that methodology, and also includes assessment methodologies for ethics, accountability and transparency. Banks and major merchants in Hong Kong have promised to refrain from sending out texts containing hyperlinks that ask for client information, as part of a joint drive with the government to clamp down on scammers using instant messaging to target victims. 15 businesses from various sectors came together on the 29th of June to mark the launch of the Anti-Scam Consumer Protection Charter, a pledge created by the Hong Kong Monetary Authority and the Hong Kong Association of Banks to curb the use of instant messages containing hyperlinks that collect personal information. If residents get this type of message, they should be vigilant and refrain from clicking on those links, warned Eddie Uaye Man, the authority's chief executive. Market regulator SEBI is taking steps to tackle the increasing number of unregistered financial influencers, commonly known as finfluencers, who provide investment advice to the public. SEBI chairperson Madhabi Puri Book announced that the organization is in the process of finalizing a draft discussion paper that will serve as the foundation for rules and guidelines to regulate these individuals. The move comes after reports of the Income Tax Department issuing notices to the top 35 social media influencers for not paying taxes worth crores of rupees, as well as recent searches on the top 13 YouTubers in Kerala for similar offences. Speaking to reporters after a marathon board meeting, Book stated that the discussion paper aimed at regulating financial influencers would be ready for public comments within the next couple of months. The board meeting also resulted in several regulatory measures, including reducing the share listing time after an IPO from 6 days to 3 days. Additionally, SEBI decided to tighten disclosure norms for large foreign portfolio investors. We are crystallizing a discussion paper to regulate financial influencers. The paper should be ready for public comments in the next couple of months, she said. Capital market regulator SEBI is expected to come up with another consultation paper on the total expense ratio after deferring the decision to rationalize TER at its board meeting on the 28th of June. Mutual funds at present are permitted to charge certain operating expenses, such as sales and marketing, advertising and administrative expenses, investment management fees, registrar fees and custodian and audit fees. All such costs are collectively referred to as the total expense ratio and are set as a percentage of the average of the scheme's NAVTR rates are slab-based. For equity funds, on the first 500 crore rupees assets under management, maximum TER is set at 2.25% and that of debt funds at 2%. On the next 250 crore rupees, for equity funds, it is at 2% and for debt funds, it is at 1.75%. Mutual funds can also charge brokerage costs, additional expenses for schemes with exit load and GST on investment and advisory fees. FIMM is pleased to announce the release of its annual report 2022 with the theme, "In the Grand Scheme of Things." Visit FIMM's official website to download a digital copy. The latest e-zine is now available for download at FIMM's official website. This edition features articles on the usage of social media for investment marketing, an introduction to vulnerable investors, as well as the recent Global Money Week. Download your copy today and stay informed about the latest developments in the industry. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.